Good morning, traders. Steve Ganz here, and welcome to the weekend before Christmas 2024. And I'm going to go through some market analysis here, taking a look at what our markets did this last week. And it was a pretty significant move, and it may be foretelling a little bit of the future. So let's just take a look at this and kind of determine what it might be telling us. So we can see that I've had over many months here, I've had lines, support resistance lines drawn on this chart. This top one was a pretty tight support line. I expected that to probably break, and it did on the Fed news that we had earlier this week. That really put a kink in our prior market activity. But I want you to note that it came down to this other support level. It held there for 2 days. On the third day, it dipped below that level. Then it did rally back, but then it also sold back off going into the close on Friday. Now, the fact that it broke this resistance level is not ideal. It's not a death knell. It doesn't necessarily mean we're going lower, but I wanted to see that level kind of hold. Worst case scenario, if we do dip down again, I would think we would come down to this level and the bottom of that channel. There's a little bit of a convergence there at that point that should hold. If that does not hold, then yeah, we're looking at a trend reversal in my mind, and that trend reversal could start moving us down. The key here is we've continued making what I will call higher highs and higher lows. We've been doing that now for a couple months until here. Here we made a lower low. We have not yet made a lower high. So if we rally up here, and maybe we only rally into this area and then we reverse and come back and make a lower low, at that point, we will have a trend change that's potentially starting. We'll also have at that point what's called a head and shoulders top, where you have a shoulder, a higher head, and then if this comes back and just rallies into here or so and then sells off, that's going to be another shoulder. Head and shoulders also tend to be reversal patterns. How this thing plays out over the next, I'm going to say 2 weeks, is going to be pretty important. And the reason I say 2 weeks is this coming week with Christmas week, Christmas being right in the middle of the week, a lot of your professional traders are not really going to be on the scene, so to speak. Most of them will probably be off the next couple of weeks. So most of the movement we're going to get in the next couple of weeks, in fact, I may even stretch this to 3 weeks, most of the movement we're going to get in the next 2 weeks is going to be largely retail traders. Retail traders don't necessarily drive the market. We're probably going to see the volume here dry up because the pros aren't going to be in there. Now, there's a couple encouraging things that lead me to believe that we might bounce up here and make a higher high. That would be a huge plus if that were to happen. The couple things that tell me that may be possible is look at this volume bar on Friday. So when we had that little bit of an up move, that volume bar was massive. Lots of buyers came into the market as we started to rally back. So that is a good sign. The other sign that we need to look at here, let's just look at a couple other symbols. Let's look at VIX, the volatility reading here. And volatility, while it spiked on Friday, it did drop back rather significantly. So that is also a little bit of a plus for us at this point, the fact that volatility dropped off the way it did. We can also now come in and let's take a look at let's take a look at RUT and see what that's looking like, the other main index that I follow closely. So here with RUT, we are still staying essentially within this channel. Again, a slight move outside the channel isn't really a huge thing. We are technically still making higher highs, and I would say higher lows. Again, that's a little bit of a question here, but this is still higher. So I would say we are making higher highs, higher lows. So we are definitely still in what I would define as an uptrend here and looking to probably, again, have a rebound that's going to come up maybe back into this higher area. Again, if this starts failing, if this starts falling out of this channel, then we got to really watch the SPX closely too and see if it starts falling out of its channel. If we look at the volatility for the rut, which is the RVX, we can see that the volatility in the rut also spiked up quite a bit here, but then it came back down. Didn't come back down as far as I'd like to see. I'd love to see it get back down into that area there. But it did come back down quite a bit as well. So again, those are going to be a couple things that we'll need to keep a close eye on coming up here in the next week or two, is to see how those couple things play out. Again, how it plays out in the 2 weeks when it's going to be mainly retail traders, not professional traders in the market. I don't place as much credence in that. If we get into the first week of January, and we start to see breaks falling out of the bottoms of these channels or making lower lows, then all of a sudden, I think we need to change our mindsets in our market and look at, are we looking at some sort of a change in the overall positioning, if you will, of the market? Are we starting possibly to build a downtrend channel for a period of time? As we know, those downtrends tend to get a little more volatile than the uptrends. There's a saying that the markets take the stairs up and the escalator or the elevator down, the elevator down. So they tend to, on those down moves, they tend to happen much faster. Volatility tends to spike more. And that spike in volatility can be really good for butterfly trading. We just need to keep powder dry and see what happens there. In those volatility spikes, that's maybe times to start considering looking at some butterfly trades. That is it on market analysis for this week. Those of you that are part of the alert service, let's now go in and take a look specifically at our positions. If we come in looking at the open positions, we've got 3 different butterfly positions here. This one ended up evolving into a double butterfly. This is a broken wing butterfly that got adjusted. This is a broken wing, a newer broken wing butterfly that was put on in that higher volatility that we had the other day. So the thing I want you to notice is that our markets have moved substantially over the past week. But look at these butterflies. They're holding up really well. So that one is basically break even. This one basically break even. This one basically break even. Obviously, we're not in this game to break even, but at the same time, when you have that big of a sell-off and we can look at these butterflies and we can see that these things are holding up perfectly fine, then what we're looking for is a drop in volatility and more time decay. As soon as we get that drop in volatility and more time decay, these T0 lines here are going to start to mound up in these, which is going to bring profitability into them. So if you have a trade like this, it can ride out those storms and then be ready for when things settle down a little bit to where profitability starts coming back into them. That's one of the keys that I look for in my income trading. I want to be in trades that can handle those rough seas, ride them out, and then still be waiting there when the seas calm to set their sails, so to speak, and start making some money. That's what I'm looking at on these butterflies, and that's what I think is important for people to see and understand about butterfly trading. Now, in addition to the butterfly trading, I got the SQ trade, which is still cranking along here just fine. And then also the FTNT trade cranking along just fine. Now, the problem child here is this one, this waste management trade. And on waste management, I had set this up thinking that we were coming into a support area in the stock. Let's take a look at the waste management chart. And my thinking here a week ago was that when waste management fell, into about this area, I was thinking, okay, it's in what I would call a range where it's likely to rebound at that point. It did not rebound. It just kept selling off further and further. So just not performing well. Broke through this main zone that I had drawn on here, broke down, came down to what could be perceived as another support level. So it is bouncing around that support level right now. But when we got that big rally back on Friday and this thing could not break above the day before, that to me is a sign of weakness. In addition, we can see that the down days, our volume was much higher on those days. Even this day where it tried to rally, the volume was high. It couldn't rally. People were starting to sell out of it. They were dumping it. If you look up news reports on this, we can see that there's been downgrades in the stock from some of the key analysts. Now, I don't tend to place a massive amount of credence in that, but at the same time, it also explains why we might not be able to be putting in a significant rally there. So what does that mean in the overall scheme of things? I adjusted my position to basically be a much more bearish position now. If this stays in its general range here or drops down further in price, this thing can start to build in some profitability very quickly. Now, you remember when I put this trade on, I said, I am going to do this trade in my size. I strongly recommended that people consider a 1 lot. I did a 10 lot. Know that the size I'm dealing with here is significantly more, has significantly more risk on it than anyone should be considering in a normal trading account, unless you really have a strong opinion of what you're doing and you have the account size to support it. 1 lot, you'd be down $126 on this. Obviously, I did a 10 lot. I said it was outsized. So what I'm looking for here is for this thing to either chop in this general range that it's in or maybe sell off a little bit further. If it were to sell off a little bit further, I may consider adding a put spread to it, turning this into a form of a condor. If and when I did that, I would raise this right wing up here a little bit too, take some of that risk out, and I'd end up with a trade that would look more along those lines, and then the stock kind of trading in the middle there. So that's my game plan if we get a little bit further of a pullback in this, which I do think we might get. If this thing starts to rally up, I'm going to have to seriously rethink my position, and I could end up taking a much more sizable loss than what I'm at right now. Obviously, with the chart looking the way it's looking, the news that I'm seeing, right now I'm thinking that's an unlikely path for this stock. Doesn't mean it won't happen. Something I just have to consider and weigh. Everything in trading is going to be a trade-off, and you applying your best thought process to the position you're in, and that's where I'm at on this one. That wraps up current positions. There was one position closed this last week for Oracle. It essentially closed at what I call a scratch. A scratch is anything that is down less than 100 or up less than 100. In other words, it was close to a break-even trade. This one happened to be slightly to the downside. It was an earnings trade. Earnings went against us hard. I battled it back by selling some additional puts to bring in some premium to reduce the overall risk in the trade, reduce the overall loss in the trade. Ultimately, Oracle just didn't rally back enough to where it was able to crawl its way into profitability. So I made the decision to go ahead and just pull the plug on that on Friday. And again, that was a small loss, what I call a scratch. So that wraps up the trade review for this week. I'm not looking to really do anything this coming week unless we get some massive swing in the market. Even if we get a massive swing, not sure I'm going to totally buy into it and trust it, because unless there's significant volume behind it, meaning that it's institutional traders making the move, it's likely going to be light volume, meaning that it's more retail traders. Retail traders tend to be they don't move the market. They might move the market in the short term when the professionals aren't there. But overall, I tend to try to see what the professional traders are doing. Those are the people bringing massive volume. So unless there's a move that also has some massive volume with it, I'm largely going to be ignoring the moves that happen this week. So, and I'm not expecting to put on any new trades either. So we all just need to enjoy the holiday season and take it from there. Take care, everyone.